Hello everyone. In today's class, we can highlight about Financial Accounting 3, Program Commerce, Semester 3, University Mangalore, Session 71. Recap of previous class. Need for sale and formation of new company, calculation of purchase consideration, concept of piecemeal distribution of cash. Learning objectives to make the students to analyze the concept of purchase consideration and its calculation, to prepare them for accounting during dissolution and sale of firm, including piecemeal distribution of cash. Learning outcomes. Students are able to analyze the concepts related to dissolution of partnership firm. The students are able to prepare the accounts on sale of firm. So in this session 71, we mainly deal with the problem side. The problems is on piecemeal distribution of cash. The students can check the study material which has been enclosed with this video to have the idea of the problem. So I will just read out the problem as given in the study material. A, B, and C share profits in the ratio of 4 is to 2 is to 1. Decided to dissolve their partnership where the balance sheet was as follows. Liabilities, creditors 5,700, bank overdraft 16,250, general reserve 9,450, capitals A 40,000, B 80,000, C 65,000. Assets, land and buildings 95,720, plant and machinery 16,300, furniture 2,400, investments 15,000, stock 64,150, debtors 22,700, cash 70,000. Total of the balance sheet is 2,16,400. The partners also decided after the creditors have been all been paid and providing a sum of rupees 1,200 to meet the possible expenses of realization. All cash received should be immediately be divided between them. Assets realized are: first realization plant and machinery rupees 14,000, investments part 1,360. Second realization stock part rupees 7,200, debtors part 8,300, furniture rupees 2,900. Third realization land and buildings rupees 80,000, debtors 2,400, investments 14,000. Final realization stock rupees 45,100, debtors 11,200. Expenses of realization amounted to rupees 1,130. Prepare a statement showing the distribution of cash. So from this problem, we have to prepare the two important aspects. One is statement showing surplus capital, and the second one, the statement showing the piecemeal distribution of cash. So the partners' profit sharing ratio is 4 is to 2 is to 1. So if we can calculate the statement showing the surplus capital. As mentioned, the profit sharing ratio of the partners A, B, and C is 4 is to 2 is to 1. So the capital balance available in the balance sheet is 40,000, 80,000, and 65,000. And if we add reserve in their profit sharing ratio, so A gets 5,400, B 2,700, and C 1,350. So the adjusted capital of the partners is 45,400, 82,700, 66,350. And now we calculate the proportionate capital or the quotient capital. So A for fourth share, that is 4 by 7th share, he has a capital of 45,400, which is the smallest quotient. By taking his capital, so if we calculate the capital of A, B, and C, it will be 45,400, B 22,700, and C 11,350. So the excess capital we have for B 60,000 and C 55,000. Again, it can be subdivided in their profit sharing ratio, that is 2 is to 1. B has smallest quotient of capital, So his capital will be 60,000 and C's capital 30,000. And the final surplus capital which belongs to C 25,000. So the order of payment here is 25,000 first should be paid to C, and 60 and 30,000 will be paid in their profit sharing ratio between B and C, and finally the balance amount 45,400, 22,700 and 11,350 will be paid between A, B and C respectively in their profit sharing ratio 4 is to 2 is to 1. The second stage will prepare the statement showing the piecemeal distribution of cash. If you refer the balance sheet, we have liabilities like creditors, bank overdraft and the partner's capital. So the balance as per the balance sheet, creditors 5,700, bank overdraft 16,250, A's capital 45,400, B's capital 82,700 and C's capital 66,350. The first realization is amount 14,230, which will be paid in proportionately between creditors and bank overdraft in the ratio of 1 is to 114 is to 325. The amount is 3,695 and 10,535. So the balance available after first realization, creditors 2,005, bank overdraft 5,715, A's capital 45,400, B's capital 82,700, C's capital 66,350. The second realization is rupees 18,400. The amount payable to creditors 2,005 and bank overdraft 5,715. So now the balance will be available: creditors nil, bank overdraft nil, partner A 45,400, B 82,700, C 66,350. So the remaining cash available 10,680 after payment of creditors and bank overdraft 10,680 will be settled to C, who has a surplus capital. After settling the C's capital by 10,680, now the balance will be A 45,400, B 82,700 and C 55,670. The third realization, first we have to pay the C's surplus capital 14,380. After paying that amount, we have a balance of A 45,400, B 82,700 and C 41,350. And the surplus amount in the third realization will be settled between B and C 54,720 and 27,360. Now the available balance between the partners: A 45,400, B 27,980 and C 13,990. In the final realization, the amount due to B and C will be settled. The amount is 5,280 and 2,640. Now the final balance as per their profit sharing ratio between the partners is 45,400, 22,700 and 11,350. So the balance available in the last realization 48,450 will be settled between A, B and C in their profit sharing ratio 3 is to 2 is to 1. The amount is 27,686, 13,843 and 6,921. So we have a unpaid balance or loss to the partners on the realization or sale of the firm is A 17,714, B 8,857 and C 4,429. So that is what we call as the statement showing surplus capital and the piecemeal distribution of cash in this problem. Thank you for watching the video. Thank you.